you rather pay? 10 grand or 5 grand, right? Here's the golden nugget rule here, right? So straight line depreciation, and how could you minimize or even eliminate your taxes, right? So for this 20%, how can you use straight line depreciation to reduce your taxes, right? Hey everybody, Dr. B here, experimenting here using restream.com. Used it definitely a couple of weeks ago with Nani, but I'm using it for the first time alone here as I am trying to experiment with better quality. So I'm going to share my screen, and what you should be seeing is my presentation on investing passively in real estate, right? So hopefully you guys are able to see that. I'm going to minimize the screen here. There you go. All right. So here's what you should be seeing, right? So here's my screen here on Investors Guides to Real Estate or investing passively in real estate. So disclaimer, the following information is for educational purposes. We don't provide financial, legal, professional advice. We introduce you to strategies we use, but may not apply to you personally. So please speak to your team of professionals before implementing any of these strategies today, right? So really quickly, I'm going to share my presentation here. So, houses everything from, everything else that you've seen, right? So, thanks to my, mentor, Mike Ely, Wendy Guzman, the team at Big Deal Maker, we were able to acquire a 52 unit in Southern Pines, North Carolina, all in cost 5.5, and I believe we'll put over 1 million in our pocket, right? And what we did was it was a 5-year, it is a 5-year syndication deal. We're coming up on the refi now in year number 2, and what will happen is our investors will start getting their money back, most of their principal. We're going to stabilize the rents, it's value add, by the way, and then at the end they will be able to double their money in 5 years. So that's what you different than what you've seen before, right? So we spoke about this already. So what's in it? What's in it for you, right? What's in it for you, for those individuals? Why even do this presentation on investing passively in real estate? Let's face it, you have a lot of individuals that are getting their tax returns. Yay, good for you guys, right? There's a lot of individuals that are have dead, 401ks or 401ks from an old company that need to be rolled over, right? So, as an example, if you invest 100K, you make, 12K for every 100K invested without doing anything. As a specific example, that's why you should continue to listen to this live stream, right? So particularly our story. So this is a little bit about me here. 23 years of experience. Do stuff with the Chamber of Hispanic Chamber of Commerce. Shout out to everyone involved, John, Aixa, Louis, Daniela, etc. Right. So shout out to you guys. Right. So part owner, 52 unit, invested in a 48 unit, invested in a 120 key hotel as well. And I have to update the slide. Invested in a portfolio deal now in North Carolina. I do have the program Elevation. I do have the Capital Connections virtual summit April 25th, and I've been to 21 WrestleManias. So shout out to Mike, Meek, Wen, Tim, Amy, Sean initially, and I got my DBA from Walden, right? So my business goals is to own 1,000 units in 12 to 18 months, which I'm on pace for that. Get into the notes game, which you're going to hear from Robert Farah in a few weeks in the summit. Continue to be a capital partner. This slide is a little bit old. I actually wrote my second book already, and take my podcast to the next level on Own a Boutique Hotel. Right. So, how do I know it's real? Because I've been involved for the past 2, 3, 4-year odyssey when it comes to that, and I see that it's real. Right. Getting the acquisition fees. God willing, I'll get the acquisition fee for Cincinnati, and of course, being able to be involved in the monthly calls and know the progress of what's happening in these apartments. So I definitely think it's real. The scripts that I learned, from Amy and Sean early on, and then of course what I learned with Wen and Mike, and then implementing my own scripts, have been able to teach myself, but also teach others how to raise capital. And I'm looking forward to teaching more about that on April 25th. Right. So that's how I know it's real. Right. So, this is straight from Mike. This is straight from Mike Ely, right? So, if you're even a high earner, right, listening on LinkedIn or YouTube, or a lawyer or a business owner, or if you have surplus income, so here's the golden nugget rule here, right? So, straight line depreciation, and how could you minimize or even eliminate your taxes, right? So, let's just say you have an apartment building that you paid 3.3 million. It made about 75,000 in cash flow. On the other hand, let's say you made 50K in income from your W-2, assuming, for simplicity purposes, that your next tax rate is 20%. How can you use straight line depreciation to reduce your taxes, right? So, as an example, being able to deduct the cost of land, right, from the purchase price, right? So let's just say 3.3 million minus 550K is 2.7, or just about that, right? You divide the cost of the property, excluding the land, by 27 and a half years, right? An annual depreciation, right? So 2.7 divided by 27 and a half years comes out to about 100K a year, right? Okay. So now that you have that number, then the next step is simply, okay, so tax income without depreciation, rental 75, taxable income 75 times 20, taxes due 15K, right? But now with depreciation, now you have rental cash flow. Then the depreciation is 100K, right? Then your taxable income, negative 25 times 20, your taxes due is zero, right? So your savings is about 15,000. Note that the 25,000 net loss is carried over to you specifically as the owner, right? Which is pretty cool, right? So, right? So, um, so negative times that is zero or negative, right? So basically, that is why when it comes to taxable income with depreciation, you'll save money as a property owner. So that's why it's good to have diversification when it comes to the different types of income streams, right? Rent income, taxable income, but then working with someone smart, having your team behind you when it comes to taxable income, and setting this up this way, right? So using the system when it comes to depreciation and taxable income, right? So how can you calculate your taxable income as an owner, right? So, without depreciation, it's just a W-2, and then taxable income, let's say surplus from our revenue from the rents as an example times 20. So 10% is due. Boom. However, with a depreciation, it's the W-2 income. You're adding the net operating loss, which is 25K. So 50 minus 25, and then taxable income is 25, right? Times 20%. Your taxes due will be there for 5,000 as opposed to 10,000, right? So what would you rather pay, 10 grand or 5 grand, right? So it's very important when it comes to that, right? So you have your W-2, you add the net operating loss, right? In this case, right, and then you add in the taxable income times 20%. Excuse me, is $5,000, right? So that's how you save, right? There you go. What would you rather pay, 10,000 or 5,000 in taxes? To me, 5 grand, right? So that is that there. So I hope you like that quick tip on tax savings. So hopefully you're interested in purchasing or investing an apartment building and hotel and learning more, right? So I got this from a old slide as well. So a single family, when it comes to comparison versus multifamily, rent versus single family versus multifamily, rent is higher, multifamily obviously. The turnover, it is a little higher on the multifamily. Maintenance costs, it is higher. Financing costs, believe it or not, it could be lower in certain instances, right? Because as an underwriter, you're saying, okay, there's the fact that one apartment could be empty, but the other three on the four unit could still be making you money, right? With this, if you purchased a home and if your tenant leaves, you're gonna have to eat that mortgage until you find that new person, right? And the total vacancy rate is always lower here versus a single family, right? So I stole this from Cindy as well. So the benefits of a multifamily when fully occupied, as an example of $800 a rent, is 3,200 here versus this single home is 800, and then with vacancy, with some vacancy, even at 1,600, and then even with here, it's zero. Once it's empty, it's zero, right? So that's why I like multifamily versus single family, right? So I took this from Mike as well, right? So apartments are becoming more affordable. So as you can see, this is just a snapshot from 2020 to 2023. As you can see here, the mortgages continue to go up, right, in 2023, right, and also salaries continue to go up, but then the monthly, you know, the monthly P&I, right, what is due has has gone up as well, right? So the year-to-year change has gone up. Look, it's gone up 37%, 54%, right? But when it comes to rent, however, in 2021, 16, 17, 18, so although it's gone up, it has not gone up as significant as what you owe the bank, right? So when it comes to wages and all that, when it comes to just in simple terms, it's why apartments and multifamily, it's easier to rent in the short term or even midterm versus purchasing a home, right? So renting is cheaper, right, for most individuals, right? As you can see here, 2162 is the average monthly cost of a home mortgage, right? 1824 is the median cost of renting an apartment, which is almost $350 less. So that's why renting is cheaper, and apartment will go up over the apartment rent will go up in long term, right? And of course, even if you just by raising the rents by $50, dividing by the cap rate, right? Just that alone will increase the value of your multifamily property, right? So there's a lot. This is a little bit older slide, but a lot of folks took this variable type of loans, and more. A lot of multifamily loans are maturing, and at this new rate, they can't refi. So as a result, a lot of those folks are going to go into foreclosure. With hence, there's a lot of opportunities out there if you have the money in order for you to um, take advantage of some of these homes, right? So very important when it comes to that, right? I don't have two gifts, so what's holding people back? What's holding people back is credit. What's holding people back is the economy. What's holding people back is fear, right? But I definitely think that it's important for everyone here to just, that's a lot of noise, right? What you have to do is stay focused on what you got to do, right? Stay focused on your goals. And if you have the right guidance, the right resources, you can start investing in multifamily, right? All right, so that is that. So I know you guys are tired of the 9 to 5, the check, of the rat race. So that's why it's important to understand to diversify your portfolio, right? So I spoke about the importance yesterday. I spoke about the importance of protection and making sure that you have the proper insurances and health insurance and the proper insurance for your home, for your car and home, and of course life insurance to replace you if something were to happen, right? But on top of that, on top of having the rainy day fund, on top of having 3 to 6 months of savings, where you're going to grow your wealth is in growth, right? Is in owning a business or the stock market or real estate, right? So thank you for being in real estate, right? So who's to blame, right? So it could be a school, it could be a job, it could be life, right? They don't teach you how to raise capital. They don't teach you how to build generational wealth, right? So, there's a lot of different, in rich dad, poor dad is 4 categories. People are a job, people are self-employed, you're just replacing your income with 1099, right? But there's also, where a business owner, right, where you, if you have the right systems, if you walk away on vacation, the business still runs. And then there's a point where you're an investor, right? Kind of what I want to be, where I am, right, where you're investing passively in several deals, right? So that's who to blame, right? But hey, man, you're here today. You're listening to my live stream, and hopefully you're able to take advantage of that, right? So why now? So 90% of all millionaires are made from real estate, right? That's an interesting stat. And not just real estate. I think now with the power of technology, you could leverage technology to do that due diligence, to do that research, to determine whether you should invest in that syndication or other real estate vehicle, right? So why trust me? Like I'm a, as you guys know, I'm very, um, I don't know what it is. I'm getting all these messages while I shoot this live, right? So my story is very simple. I've um, I've had my own LLC for the past 7 years. I've had been working with the Hispanic Chamber and, of course, a few other nonprofits for the past 5 years. I've been involved in real estate for the past, 3 years on the investing side. Of course, I'm a primary owner with my wife, or of our primary residence. And interesting enough, or oddly enough, I studied a couple of masterminds. I joined a couple of masterminds, paid a hefty penny, but thanks to those masterminds, I was able to learn to underwrite, learn to raise capital, and based off that, make myself useful with a specific team in order to raise for a deal in North Carolina, in Ohio, and of course investing passively in Louisiana, right? Yeah, so where I'm at today is helping raise for a deal in Houston, God willing, right? We'll get that funded next week. And then, of course, I believe I'm going to be discussing the deal that we close in November, but there's still space for one or two investors for that, right? So that's a little bit about me. So how does it work? Hopefully you want to know how it works and how you're able to use your dead 401k or IRA money, your tax refund money, or even money that you have rolled in the bank, right? And how does that all that work? How do you put it to work, right? So what we do is we try to find distressed properties, in our case in the multifamily space, and it could be different ways of getting it: foreclosure, tax lien, broker, um, so that's what we do. And what we do is we do a lot of value add, and we do 5-year syndications, right? So the process of a loan syndication, right? So it's all about being able to have understand the origination and mandate, and understanding that a syndication is like a 5-year hold. And let's say if interested, then you'd be sent an executive summary, PPM, right, and any information you may need in order for you to do that, right? Then there's also documentation that's involved in that. And then once you get the paperwork, then there's the opportunity in order for you um, to invest and officially wire the money, right? And then the most, at least syndicators or any syndicators have a portal where you can see in real time where your returns is happening and how much you put in, and where you have your money and all that. And that's a syndication process, right? Yeah, so that's according to fastercapital.com, right? So that's basically how that works. Um, so basically, as the when it comes to investing passively, why is it a win-win for you? So um, the investments are secured by real estate to an extent, right? High returns for your money, better than the bank, predictable income stream, no management, no headaches, managing contractors, etc. Right? So there's you could be basically as a as an investor, or the ways you think you could tap into investing passively is it could be an old 401k, right? Or a solo 401k. It could be a self-directed IRA. It could be a HELOC. It could be a trust fund, savings, personal or business line of credit, inheritance fund, life insurance, HSA, credit cards, stocks, right? So those are just some sources of private money that you say, what, I should move that into a real estate deal, right? And hopefully you take that action, right? So the benefits of investing passively in real estate, it's hands off, whether it's a REIT or whether it's a syndication or crowdfunding, allows you to earn without the need for active involvement in managing properties. As far as diversification, right? Passive investment allows you to diversify your portfolio, whether it's residential, commercial, industrial, right? Business, right? As well. Steady cash flow. It's consistent cash flow through dividends, rental income distributions, or profit shares. Of course, if it's a syndication, it'll be more in the back end. Year 2 or year 3, you start seeing your money, right? Um, access to professional management, right? So investment opportunities, whether it's a REIT or a syndication, is managed by experienced professionals, right? So as an example, all the deals that I'm involved with are either managed by Tim Vitale from Vive Management Group, or managed by Mike's folks directly, right? So definitely, there's a lot of syndications out there, but I think it's all about connecting with the right folks in order for you to get the most for your buck, right? Then there's also tax benefits, right? When it comes to depreciation, mortgage interest deduction, deferred taxes, and then you could do, things such as a 1031 exchange. But you definitely talk to your accountant about that. Where, in theory, let's say, I forget what the window is, but there, you in theory, like, let's say you sell a property, in order to defer the taxes, not pay it right away, you have to purchase a property within a certain window, right? So that's that. There's also scalability. It allows you to allocate your capital to multiple projects. Like me, I have 3 or 4 going, and less individual capital than buying a property, right? So when you're buying a property, you have to fork up the 500K, 600K, $1 million straight up, right? But when you do a syndication, especially passively, you're just providing 25K, 50K here. So crowdfunding allows fractional investments, right? Making real estate accessible even with a smaller budget, right? Lower entry barriers, right? So similar to the number 6. So, a fractional investment, you can invest 5K, 10K, 15K when it comes to crowdfunding. When it comes to a REIT, a syndication, probably a little bit more. You reduce that risk exposure, right? You're not exposing yourself to 600K, you just 25 or 50K, whatever it is. There is potential for long-term appreciation, right? It contributes to the increased return alongside regular cash flow, right? And liquidity options in certain cases can happen by owning the physical property. You can sell shares in a REIT on the stock market, or potentially withdraw your investment from certain platforms, right? In certain cases, not all cases, right? So one deal that I did wanted to discuss, this is an example deal that we closed, was the portfolio deal in Cincinnati. I think this is a piece of Eagle Watch. These are some of the numbers here. 2x multiplier, 18% IR, average annual return there, and that's that. Here's an example of investing 100K. By the year 3, you do the refi, you'll get half of your money, right? And then year 4 and then year 5 of the sale, essentially you will 2x your money. That will equal over 200K in that case, right? So being very conservative here in the numbers, and that's exactly how that would work, right? Here's a picture of Wyoming Crossing, and very similar numbers here, and then here's a picture of heirlooms here, and it's very similar here. So by investing minimum 25K, you get, as an example, the investor will get involved in the portfolio deal, which is 10 plus 4 plus 4, right? So almost about 18 million total, over 18 million in the 3 deals alone, right? And we closed this in November, and right now we're giving everyone their K1s back, and we're working on the rehab, and I believe we have space for about one individual. I believe there's space for 100. I think we need like 120,000, and it's going to be more for reserves. Once we hit that target, we could pay back our GPs. So if interested, let me know. So 5 common ways private lenders fund their deals, right? As I mentioned before, it could be cash, HELOCs, personal business lines of credit, retirement accounts, and liquidating securities and or investments, right? So how can you get started? I would say, if those individuals that are interested, give me a call or send me an email, send me a LinkedIn message, and from there, be able to do that, right? So awesome. All right, so following the rules, we don't guarantee returns, we don't pull investors' funds, and SEC.gov to learn more, right? So you have 3 options, right? So what do you have to lose, right? So option 1, do absolutely nothing and stay exactly where you are right now, and that's cool with me. Option two, you could do it yourself, YouTube University, and good luck. Or number three, let me or let us do the heavy lifting for you, right? So you're thinking, oh my God, there's 10 ways of money. I do have that money sitting somewhere. What do I do with it? Or what should I do with it? Park it in real estate, right? So let us do the lifting for you, right? One last thing is, we, if you're looking to master capital raising and wanting to be on the other side as an investor, we're having a free virtual summit on Saturday, April 25th. We have about 114 folks registered. We have about 114 accepted invitations, 49 registered officially for the event. So we're kicking butt. We are crushing attendance for the event on Saturday the 25th. Our goal is to get 100 folks in the room, 300 to register. Half of you guys are flake, and hopefully we have 100 folks in the room. So it's a fantastic opportunity. We have a fantastic lineup. We have someone discussing marketing when it comes to raising capital. We have also someone discussing AI when it comes to raising capital, leveraging debt financing, and I'm going to do some implementation exercises to raising capital. So, one thing is to invest passively. Please, by all means, I think you should. But if you're looking to raise money and be an investor, I would scan the QR code there, or go to app.borjaconsultinggroup.com/register, and it's free with the code money, right? So that is that, my friends. So hopefully that was very helpful for you. That's my contact information, and this was good. I enjoyed the. Hopefully you enjoyed that ends my presentation. So hopefully that was good. Hopefully you enjoyed that, and I believe it worked. So hopefully that's good. So I enjoyed the presentation. This is great. First time using ResStream. First time me using ResStream. Last time I delegated that, but now that I officially own it, I think it's going to be fantastic, and it's going to be a great tool going forward. And we're definitely going to be using this for the virtual summit on April the 25th. So for those interested in Cincy or deals like Cincy, let me know. For those in the summit, let me know as well. So thank you so much. Have a great night. Take care.